Hey traders, John Howell here. Today I'm going to give you guys a bit of a look into the future. What's coming for the rest of this decade and how can we prepare ourselves for it? We're going to be talking about the debt, we're going to be talking about interest rates, and we're also going to be talking about inflation and what's the likelihood of what's going to come. Plus, also, there was this article that came out a long time ago. Get ready, 2018. Maybe they were off by 10 years. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so before I do start guys, make sure very first thing in the description, grab access to that free trading course. Actually, I'm giving away free access to my trading course and I'm going to be teaching you my #1 trading system. So the very first video you actually get is a replay training of a training that I did. Goes for 90 minutes, walking you through all the details to my #1 trading system that I use on all the markets, and how I scan the market, so on and so forth. And then in the rest of the actual trading course, you get the foundations, the biggest mistakes you make and how to overcome them, chart reading mastery, and a whole bunch of other down-home country goodness as well too. So very first link in the description guys, or go to johnsfreegift.com. Now, here was this article that came out, Phoenix, right? This here, I forget exactly the date of this. Actually, you know what? I can see the date here. The date says, let's see if I can I zoom in here? There we go, I can, can't I? So the date says, it says January 19, I think that's 83 or 88, one of those, 83 or 88. Anyway, so you can see here on this PowerPoint I'm using right now, you can see here that that's what this article is saying, right? 2018, that they were saying, get ready for a world currency. You know what? I reckon we are going towards some sort of global currency. I feel that we can see that, right, when it comes to digital and stuff like that. So maybe they were off by 10 years when it comes to that. So anyway, leave a comment below. Let me know what you think about that whole topic. Anyway, so what I want to do is I want to bring up this screenshot here. Now, this is a sort of an updated version of the screenshot that from Ray Dalio that he put out a while ago. And what it is this blue line is the debt, okay, the debt curve over the last since 1920s. Sorry, the red line is the debt. The blue line is the interest rates, okay? So this is where we can really position ourselves to know where we are going now, probably for the next 20, 30 years, what's going to happen with a lot of things. So let's actually start with for the next 10 years. What's going to happen is when it comes to the debt, we are in a very similar situation to where we were back in the 1930s, 40s, and then almost into the 50s. Make sense? So when it comes to the debt, the same sort of thing happens, 0% interest rates, so on and so forth. So what's probably likely to happen when it comes to this is we can see that even back in the 30s, look what happened, right? They would have a massive printing of money and then they try to reduce their balance sheet. Then a crisis would happen, which caused them to have another spike. And then they try to reduce it again, which would cause it to, another crisis to happen and then have another boom again. And then they got to a point where they had to start to devalue and default and restructure and all that sort of stuff. And it was a very slow grind down, right? So it was from that point. So where we are right now this is actually not the curve. This is actually just put in by someone else. But you can see here, right, like the market came down. Obviously, then we had the 2020 situation, and then yes, we got the massive spike in the money supply, right? So what have they been doing for the last probably close to 6 months now? Maybe even more. What have they been doing? They've been trying to do this, haven't they? They've been trying to do that, and they're probably going to continue to do that for a little bit until the next crisis happens, and then they're going to do something like that again. Right, and then what's going to happen is we're probably going to start to make our way back down. So I believe there is one more big boom to come, and I'll explain the reasons why I believe that when we talk about inflation. Okay, this is all going to tie together about when it comes to the debt. Okay, so that's the first thing I want to say there, but I'll get to that. I'll get to more on the debt in just a minute, but I want to touch on the interest rates. For the last a long time, interest rates have been slowly, steadily going down, right? So if we go have a look, I'll bring up my screenshot here. my web browser here, and you can see this is actually the US 10-year, and you can see we've been slowly trending down when it comes to the interest rates. So we've had a period of lower interest rates, right? And more debt. And the whole thing is about savers are losers and all that sort of stuff. So the big thing is that where we are right now, we are changing the tune of what's going on right now when it comes to that scenario. And so we can see that we're at the bottom through here, and so what's probably likely to happen is we're probably going to go through another crisis soon. And I'm going to talk about that in just a minute. But we can see we have probably going to have a bit of a pullback soon in interest rates, because of the next round of QE that's going to cause from the next recession and so on and so forth. And again, I'm going to talk about that in just a minute when it comes to the debt. But we're probably going to get another pullback here, and then guess what? Then we're probably going to start to see a move up, and this is going to start we've had like what, a 40 year, was that 40 years? Yeah, some 30 to 40 year of a bear market going down of interest rates. Now we're going to spend the next section of my entire lifetime. We're going to see an increase of interest rates. We're going to slowly step back up. So this is a major bottoming pattern overall in the US market. And even if you look at the Australian market, right, you can see here, this is the Australian 10-year. And if I zoom in on this, you can see also, ever since back to 1982, right, we've been slowly trending down. This is the reason why property's been so good overall, right? Slowly going down. And now look what's happening, right? We're getting this massive spike on the 10-year in the Australian market, and that's telling me now we're getting ready for, let me see if I can just go all and see, that's actually all through there, right? Since the 1970s, right? And then we had the massive spike through there in the 1980s. My dad actually lost his house in the 80s when the interest rates got that high. I'm pretty sure it was around about that period. Well, actually, it was around about this period through here. I think it was sort of late 80s that my dad actually lost his house from that. But you can see that we're actually starting to change the tune now. So we're probably going to start to see across the board, interest rates are now changing the tune from what we're seeing now. And we're probably going to start to see something like this when it comes to interest rates. So that means also property, you're not going to see the big booms, I believe, in property. The booms that we've seen in property over the last 20, 30 years, we're probably not going to see the same thing for the next 20, 30 years. So I think there's going to be a complete changing in the overall way that we see things. I know I may be wrong through there. So I'm not a property expert by any matter, guys. So that's what I'm seeing through there when it comes to that. Now, what I do want to do is I want to share something with you. So right now, if we actually go back and so I want to talk about the debt bubble here again, and I want to explain the reasons why when it comes to the debt that I see that, yes, we're starting to try to do this, right? We're starting to reduce the balance sheet and so on and so forth, and that's what they're trying to do right now. And why I believe we're going to go through this one more time, that's going to cause another big boom. And it's all got to do with the inflation, the next recession, and just history repeating itself. So history is repeating itself from the debt and the interest rate cycle back in the 30s and 40s and where we're going long term in the interest rates. History is repeating itself back from the debt, from what actually happened with the debt before we actually restructured. Okay, so as you can see, it was closer towards that 1945 to 1950 period. That's when we started to definitely restructure. I believe we're going to have that 2025 to 2025 to 2030 is going to be like the 1945 to 1950 period. So I believe there's going to be one more big bang that's going to come. And let me show you why. So if I bring up let me actually show you the inflation, the inflation interest rates, okay, the inflation data here, because I want to show you. So we right now are very, very, very similar to where we have been back in the 70s when it comes to inflation. So when it comes to inflation, you can see, look what happened back in the 70s. So again, the similar situation what happened back in the 30s with the debt and the interest rates is what's happening right now. So why I believe that as they're starting to tighten now, they're going to cause another recession with its honest way. But then from that, they're going to have that next big, one more big boom in printing that's going to cause the next inflation spike. And the reason why I'm saying that is because if you just go look back at history, you can see what's happening here. So this here was roughly the middle. So roughly around the middle was here. That was actually the 1970s. You can see the 1960s, then the 1980s, okay? So if we're just going back with the last time we actually had this sort of same, right now when it comes to inflation is very, very, very similar back to the 70s, right? What actually happened back in the 70s? We actually had a bit of a pullback first, which, as you can see, that's maybe the start of the 70s, bit of a pullback first, start of the 2020s. Then we had what? Obviously, that was a deflationary period followed by an inflationary period. What do you think caused that? Right? Same thing, right? And then guess what? Then the middle of, so this is the 70s, and this here would be roughly 75, right? So 70, 60s, 70s, 75, 80s. So look what happened here. A few years, look what happened. We got to a point where we actually started to what? We actually went through a bit of a deflationary period. What do you think that was? Another crisis. Now, why did the middle of the 70s we have a floor in the markets, in the inflation rate, and then we went for another big boom? Why do you think that is? Because what? We went through a recession period through the 1970s, and then they did another big round of, of that thing that goes out to the big QE round, right? And to stimulate the markets again, like they did back in, obviously, in the vid situation. And then guess what? Then we had another big inflation spike because they did the exact same thing back here, which caused that. And they're going to do the exact same thing here. But the next one's going to be much bigger, right? So they're going to have another boom in inflation rates. So we can see what's likely to come moving forward from here. So this whole thing through here, we got another round of QE. That's why I say when it comes to the debt curve, remember the debt curve looks something like this, and it come down and we had another big spike. And I said, I believe we're going to have another big pullback. So we're trying to get this pullback right now in the debt curve, just like we did back in the 30s. And then guess what's going to happen? We're going to get a bit of a pullback in inflation. This one here is going to be a bit of a deflationary period, right, into the next recession. They're going to come around with I believe, one more big round of QE, and it's going to be much bigger than the one they did back in. Because if you just look, every single time they've done the printing packages, it's been bigger and bigger and bigger and bigger, right? So the next one's going to be the biggest one of all of them. And they're going to come out and they're going to start it's going to start to rain. Go watch Hidden Secrets of Money by Mike Maloney. I think it's episode number 9, and it's going to be currency raining from the sky. And that's when you definitely want to own gold. Because I tell you what, gold, 5,000-10,000 by the end of this decade, that's when you're going to start to see that thing happen. So the middle of this decade, towards when that happens, that's when the US currency is going to get hammered, and we're going to start to see metals and miners go absolutely just crazy. So we're going to get this deflationary period, just like they did back here. They obviously did a massive round of QE here to prop up the market again, and then went through another big inflation spike, and then we're going to get this next inflation spike. And what's going to cause the inflation spike? A massive QE package, and that's why we're going to go through another big debt. And then guess what's going to happen? Just like the 1970s, they're going to start to really jack up the interest rates by the end of this decade. They're going to start to default, restructure, so on and so forth, just like they did back in the 30s, and we're going to start to see another big crisis coming into it as well too. And we're going to start to see through that. So all in all, traders, you can see here that this is the reason why, if I had a gun to my head for the rest of this decade, that we can see there's going to be big booms and big busts. So there's going to be a really good time, maybe even the times right now, if you're looking to invest into the stock market, maybe that time is now. Maybe there's some really good opportunities now to hold, because yes, we may pull back another 10%, we may not, right? Now I'm talking about individual stocks, right? Because we've actually pulled back sometimes 60, 70, 80% in some stocks. So maybe a good time to buy, maybe there's a good time to invest. When I say invest, by holding it for a good few years, because we know we're getting very, very close to the next recession, and then maybe that's going to be a good time when they're gonna do another round of big QE. That's going to push up stocks again, and so on and so forth. And when they do that, that's going to start to kill the dollar. And then on the other side of this decade, when things start to really unwind, on the second half of this decade, then that's when you're probably going to start to see gold make some big moves. So that's where I believe when it comes to gold and the mining sector, I think a lot of people are getting frustrated. But the way that I look at the gold in the mining sector is I look at that more like I've always had a this decade view. I don't know when that thing's going to start to make big moves. You can watch the charts and see the overall change by watching the trend and stuff like that. The big thing is that you just never know when that big move's going to happen in gold and when the big move's going to happen in the mining sector. That's where my longer term positions this decade has been the miners and the metals, because I believe they're gonna pop, and they're gonna pop hard. The short term, we're going to see another reflationary happening within the stock market, but not straight away. Okay, we're going to have a lot more blood in the streets. There's going to be a recession. There's going to be a big bang. A big bang is going to be like a big firm go out. When you start to see and when you start to see the worst, we're towards the end. And the worst is when you start to come out with, if you have a look at 2008. And when did Lehman Brothers collapse? And let me actually bring this over here for a minute. When did Lehman Brothers, if we have a look at the S&P 500 and we go back to the 08 period, when did Lehman Brothers collapse? Towards the end of 08, right? Towards that September period. So we started getting the news, or this is a weekly chart here, right? We started getting the news all through here, and it started getting really bad through here, right? With the whole banking collapse. That's when we start to hear that sort of stuff in the news, when we're starting to get these big bangs happening of big firms going under and so on and so forth. That's when we're getting towards the end of this complete bear market. So we're probably going to see a bit more downside to come out of the markets, and then we're probably going to see that, and then it's going to get really bad, and then they're going to come through, and they're probably going to do some more QE, and it's going to reflate the market through there. So I hope this helps you out today, traders, and I'll see you in the next video.